All FANG stocks are now in a bear market. The same consistent pattern is occurring and the feedback loop is resulting in a bear market for half of the S&P. US stocks were up until just recently the last safe haven in global equities, but that has suddenly changed. With global quantitative tightening piling up on top of geopolitical issues, what can push the market up to new highs? You came here for the truth, so let me unveil that for you. Today we are going to look at the stock market. I want to talk about FANG stocks. I want to talk about US stocks. I want to look at global equities. I have so many charts and articles to show you today. It's going to make your head spin. You're going to know everything that's happening right now. Let's begin by taking a look at this article out of CNBC. Dow tumbles more than 200 points in wild session. S&P 500 closes in on correction territory. So here we can see that the stock market has been wild. I'm going to show you the charts in just a second. But ultimately what we have is a market that can't figure out where it's going. There's uncertainty. We had seen leading up until this point, until October basically, that at least the FANG stocks or the tech stocks would be the trade. You can always rely on that. But now, October has really changed everything with the FANG stocks in correction territory. Then they went into bear market. Can you believe it? I mean, we're talking about the biggest of the big stocks today. These are the US markets at the top, the S&P, NASDAQ, and the Dow Jones, all finishing in the red. In fact, the Dow Jones was down nearly 250 points today, and it had come down to a level below that 25,000. Well, you can see that this is a trend that is continuing. Where it will be at in the next few trading sessions, I don't know. I'm just tracking the progress as it happens. Stocks closed lower Monday in a volatile session with the Dow Jones swinging over 900 points as concerns about global growth resurfaced following a news report that suggested that the US is about to intensify its trade issues with China. Every time I check the news, I get the same thing happening over and over and over again. China and the US are going to sit down and everything's going to be fine. Stocks trade based on that, they go higher. Then it seems like it's 8 hours later and I see new information appearing that suddenly the trade issues are going to be intensified. And it keeps on happening back and forth, back and forth, back and forth. And that's the uncertainty that's really, really bad for the market right now. Of course, you're not going to see that in the VIX, but it is a fact. Amazon shares are cratering down 6% today, down 23% in the past month. This is officially a bear market. Now, Amazon is not the only stock that is in a bear market, but think about this. You have a company that was just recently worth $1 trillion, and ever since that day, it has been tumbling. It's not a coincidence that as soon as it hit that point that the market came down. This right here is all about the technical traders. They saw it hit the 1 trillion and the triggers were activated. Okay? Now, of course, there's a deeper trend to bring it into a bear market. That's going to take some significant selling. It's not just because it hit 1 trillion, but certainly that's where a lot of algorithms were set to trade at. It did so, and on that day, still hasn't been able to come up. In fact, it's down 23% since then. You could see that it was down over 100 points in today's trading session alone. We're looking at this sitting around 1,500 points. That is still a big company. Let's not deny it, but it has shown this true weakness right now. All of these FANG stocks have really made a change recently. Traders are making a boatload betting against the once beloved FANG stocks. All right, we're looking at these being just recently the only game in town. They were the ones you had to invest in if you wanted to get any growth. If you wanted any advancement in your portfolio, you had to be heavily based around FANG stocks. Not just NASDAQ, not just tech stocks, but you had to see them right in the FANG stocks. They had to be one of these, and You weren't going to see growth otherwise. And suddenly, as soon as these stocks came around and now from correction territory into bear market, they have actually shown the rest of the stocks that there's nothing supporting this market anymore. With the NASDAQ already in correction territory, widely defined as a pullback of 10% from a recent peak, the Dow and the S&P 500 came close, although both indexes trimmed losses ahead of the closing bell. So I'm just showing you some more details here, looking at this out of market watch. Essentially, they're showing us that all of these markets are around that correction territory, but there's a readjustment of portfolios that's going on. They're moving out of the FANG stocks and they're moving into staples. They're moving into some other sort of household names. All right. Now we're looking at this. I try to show you this every single day that I do cover a video like this, where in the top left corner, we're seeing the Dow Jones, the S&P 500, the NASDAQ, and the Russell all moving below their moving averages, including the 200-day moving average. Now, at this point, I can tell you here that the market is oversold. You look at all the technical analysis, it's showing us that. But as far as I'm concerned, I don't make bets on this. I don't say, well, it's oversold, therefore it's a good time to buy, because you don't know how the market's going to react. If I was a technical trader at this point, probably I would be going in and looking to add to positions. I'm not saying to do that. I don't have any investment. I don't have any skin in the game, and I'm very, very heavily biased. You know that. So I'm just telling you like it is. At the start of the year, 9.3% of the individual constituents of the S&P 500 were in a so-called bear market. All right? By October 22nd. So this is a few days old. So now it's gotten even worse. The percentage declined to 34%, and more than 70% of the stocks were in correction territory. And it's gotten a lot worse since then. Okay, this information is actually old. The concern among some analysts is that the surge in securities hitting that 20% loss mark could lead to a tipping point and falls of a similar magnitude in overall indexes, which typically leads to a long-term downward trend. That's the reason I show you the article, simply because this is the way it happens. Suddenly, you have a few stocks going down, a few big stocks start to follow, then the market trend is in, we go into correction territory, and then we end up into a full-blown bear market. That's what is worrisome right now. The issue that we have today that wasn't present in other situations that we've had, for example 2015, which was quite shaky. The market almost collapsed there because it had come down significantly. You had weakness in China, you had problems still in Europe, and so on. And the issue is rising interest rates. Okay, looking at this in order: Facebook, Amazon, Netflix, Google, all of these beaten up today. FANG stocks down 23% from the peak up until today. This is up until the 29th, trading session on the 29th, in October alone. That is incredible. That's almost 1% down for every day of the month. You can see where it has gone, going back to levels we haven't seen since April. Significant losses. All the gains that we have seen basically throughout 2018 are evaporated, practically. Actually, if you look at other markets, not just the FANG stocks, but other markets, all the gains from 2018 are gone. The rolling bear market is finally attacking the final holdout, U.S. equities. Everything right now is doing terribly. Everything. And this could only get worse. It's not going to take much to push the remaining things that are just barely hanging in there right into a bear market. Nearly half of U.S. stocks off more than 20% from their 52-week high. It's not just 1 or 2 or 5 stocks that are down. It's a lot. I mean, look at this. Nearly half of them. They're down more than 20%. Can they turn around? Can this go into breaking all-time record highs for a lot of these stocks? Absolutely. Of course it can. But what if this goes from 20% to 25% to 30%. Turning that around becomes more difficult the further down it goes. Total return by sector, when you look at this, we're looking at how far it's come down. The S&P 500 is what they're showing us at the top. But look at utilities. It's actually slightly positive right now. That's where people are moving their money. Not individuals, of course, but the institutions. That's what they're doing here. And otherwise, is pretty much everything else is flat or negative. Share of index constituents in bear market as of the 1st of January 2018. I wanted to give you an idea of how the market looked at the beginning of the year compared to today. This green line represents stocks not in a bear market. So you could see it's practically all green, no matter where you want to look. Brazil, Hong Kong, Japan, and so on. But you follow what happened with emerging markets suffering big time. That's the first one on the list. Then taking all of the others with it. It's become terrible. And nobody seems to want to talk about the elephant in the room. Global central bank assets year over year. Fed, ECB, and the BOJ. Well, this is actually moving into the negative territory by January. That's if the ECB keeps its promise. You also have the Bank of Japan saying, well, we're going to print less money, but don't worry about it. Everything's going to be just fine. This is the reason why stocks will collapse, whether it happens today or tomorrow or a year or 5 years. Eventually, it's going to be the Federal Reserve that causes this issue for the US that will pull the rest of the markets down. The ECB, the BOJ, the SNB, the PBOC, and so on, they're all in this together. QE coming to an end will have significant implications for global fixed income markets. All right, of course, but it's going to have an impact on equities as well, and housing and everything else. They control the market. They decide what will rise and fall. If you found this video informative, please give me a thumbs up. And give me a thumbs up, it helps to support this channel. So I do appreciate that very much. And last but not least, if you want the financial education that you were not taught in school, well then these two books have it all. You could actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.